Okay, good evening, everyone. My name is Sean. I'm 17 years old. I've been trading for about a year and a half now. I've been learning how to trade for about a year and a half now. I do apologize for my webcam. It's a bit ugly and it's not nice. It's not working properly. I don't know what happened, but I'm gonna fix that problem. But just focus on the content that I'm trying to share, not on that part that doesn't look pleasing. So what I decided to do is to start sharing my trades, my losses, my wins, and just putting them out there. That would allow me to be able to hold myself accountable of my losses and my wins, and to be able to track my progression as a trader. Because I've been jumping from strategy to strategy to strategy to strategy, I haven't been holding myself accountable for my losses, and I want to stop that now. I want to put everything out there so people can see, okay, he's winning here, he's losing here, he's winning here. How am I dealing with that? Because when everyone is looking at you, you don't do stupid stuff and you don't make silly mistakes. But today I'm just gonna be going through some of the trades that I did take. I'm gonna be going through NZDUSD. I took this last week and I was looking to capitalize on it also this week, but I missed that opportunity. I did I'm gonna be going through gold, my focus for gold, and I'm gonna be going through my recent trade I took yesterday at night on EURJPY. When I'm saying at night, it's because of my time zone. I'm in South Africa, right? So I'm gonna take the webcam screen off so we can just focus on the charts, because that is ugly to look at. I don't want to look at that. I'm gonna take the webcam off. So now this is the website that I use called Notion. I use this website to focus, to track my progression, to track my losses, to track my wins, and see how I'm doing. So I'm gonna be going through NZDUSD now. This was my focus for NZDUSD. Now I did update my the forecast, but this was the first forecast that I had on NZDUSD. So we're gonna be starting with that. I did take this trade. It did not play out as I wanted it to play out, but I'm gonna explain everything when we go to the chart. So on trading view, this is NZDUSD. Right, so I'm just gonna be going through everything. I actually took it. Okay, so let's get it. So the way I trade, I don't trade support and resistance the way that everyone else trades. I don't trade that. I trade in a different way. I trade something that's called nature's theory. Now, nature's theory is market structure, how the market actually works, how it takes time to breathe, how it takes time to move, how it takes time to correct itself, and all of that. So basically, what it is there are three cycles. Sorry, there are two cycles, right? So the first cycle is the impulsive cycle. So if this cycle here, the impulsive cycle, where the market is just moving with aggressive momentum in the dominant direction, right? And then you're gonna have the second cycle, which is the corrective cycle. Now the corrective cycle, it normally prints out a pattern, right? Which is something that you guys might know is bull flag and bear flags. So it prints out a pattern, and this pattern able to tell you where we're going next. And this second cycle is called the corrective cycle, right? It's mostly counter trend. So when you have your impulsive move, it's always in the dominant direction, right? And then you're gonna have your second cycle, which is the corrective cycle, in the counter trending direction, right? So these are to look. It's just a textbook thing. I can't go through everything on one video because I really want to keep this short. So I'm just gonna dive in and explain how everything came to be. So I'm gonna take this line off. So yeah, if we go back to my if we start off on the daily, what I was looking at on the daily, what I was looking at on the daily, what I did see on the daily is that we had a big impulsive movement to the upside, right? This impulsive movement to the upside. So like, okay, this is interesting. So what I'm expecting you to do is create a continuation pattern to confirm the impulsive move, because without the continuation pattern, the impulsive move is not confirmed, right? So most people would be looking at it like this. They would be looking at it as a zone, and they want to see a retest and they want to take it high, but I'm not actually looking for that. What I'm looking for is what I can't see on a daily time frame. I normally go down to the H4 time frame to actually zoom in and try and see what's happening there, right? Okay, so when I go to the H4, what I did see was okay, let me just use the replay button to take off the price action that is happening now. So we didn't have all of this here. So in the H4, I was only focusing on structure. I was looking for structure and I want to trade inside of that structure. But keeping in mind that what I'm actually looking for is a continuation to the upside. Now that might sound complicated, but you understand what I'm saying in a bit. So let's say that we have, I'm just going to draw it here on the side. Let's say that we have an impulsive move to the upside, right? And then we do have our continuation pattern printed here, our continuation pattern. Now within this continuation, you're also gonna get impulsive and corrective cycles also within that continuation pattern. So you can actually trade within that. Right now, that's what I was looking for. So I did see this structure that was forming here, and I did see this impulsive to the downside, and it just started correcting here. So what I was looking for was, bear in mind when I showed you on my Notion program, I didn't include this touch here. So we're just gonna put it exactly how it was. So what I had was I had something like this. This is what I had originally, and I was looking for a move to the downside. When I went to the 1 hour, now you need to understand that trend lines are just a guide. They're just framework. Don't make them subjective. Don't say if a trend line is broken, I want to see a retest and I want to buy. That is wrong, and that's why you're gonna be losing most of the time, because you're making trend lines so subjective that you're following. You're following my psychology. What you're doing is wrong. So you'd be looking at something like this, right? I don't know, something like this. If it breaks and I see a retest, no, trend lines are just a guideline. So something that I like to utilize, something that I've learned, is something that's called pattern separation. So this pattern here, it's on its own, right? And it's forming inside of this trend line. So for a pattern to be complete, you need to see 3 touches on a pattern. That tells you that this pattern is complete and it's ready to progress. It's ready to move in its intended direction. So what I did see when I came to the 1 hour time frame is I had something like this. Now with this, I was only seeing 2 touches, right? And I didn't like this trade, even though it looked good, but it's not in my trading plan. I like to trade multi-touch confirmation. Now, what multi-touch confirmation is when we see multiple touches, like 3 touches, which indicates that the pattern is complete and it's ready to progress in its intended direction, right? So I modified my trend line, I brought it in here, and I did see this was cutting through price, right? And that's actually good. The reason why I'm saying that is because what I would also be looking at is around this level here, where this high is. I'll also be looking for something that's that we all know is a double top. I was looking for a double top, so I was looking for it maybe to reject this line here, double top. But the moment it passed that line, I knew that most people would have this here, that they have supply and demand zone. They would be waiting for price to come down. Boom. Once it comes down, then they would buy, which is actually what the market likes to do, likes to trap mass psychology first before it actually progresses in its intended direction. So I took this off, right? I took that off, and I saw that we had 3 touches on this move, 3 touches here. Our 3rd touch, the market pierced through the trend line, which is good. So I just need to take the trend line off a little bit, but keeping in touch, we do have 3 touches. That's confluence number 1. Confluence number 2, we also have 3 touches on this part here. 1, 2, 3 touches. So this area here is an area of high confluence to go to the downside. In this particular pattern that I did see, this pattern here, it's a reversal pattern ascending channel. In the way that I trade, I know how this pattern works, and I know how it likes to behave on Kiwi dollar. So I was able to capitalize on that. Now, not each pair, not every single pair has its own behavior and its way that it likes to move. So certain pairs might print out deeper corrections. Certain pairs might print out like smaller corrections. It depends on the pair. Now I understand the characteristics of NZDUSD because I've backtested it and I've kept data on it. So I understand how it moves. So I actually like this. So what I did is I wanted to take my trade right here when I saw this retracement candle. Yeah, I wanted to take my trade there, but I couldn't anymore. That's why when I showed you on that Notion website, I wanted it to break the trend line, and I wanted it to print out a continuation to the downside. That's what I was looking for, but then I didn't get that. So what I did get that was interesting to me was this, and I've seen this many times when I was backtesting. So what I did get was it touched the trend line. You can draw your trend line however you want it. I prefer drawing my trend line to the week. So what I did like was this, after this candle here and this next candle, the red candle, the bearish candle that confirmed bearish momentum. So I went in this trade. It's a 1% trade, 1% risk, and I had my stop loss. I had about, let me just check on my phone. Screenshot it. Okay, about 30 pips. I was comfortable with this, but keep in mind of what's possible and what's probable in the markets. So now it's possible that the markets can come to this level here to form a double top before it actually moves to the downside. And it's also probable that the market might just move to the downside, right? So this was a clean trade. I do regret this trade because my management was a little bit aggressive, so I didn't maximize my profits on this one. I didn't scale in on this trade. I do regret that, but it's fine. It's a lesson. So little or no drawdown. There was like no drawdown on this trade. It just went in. There. Now what I did is, when it got here, I did put my my stop loss to break even. So stop loss trailing, I did put my stop loss to break even, and it just kept going, just kept going. I was also looking for a pattern that would show me continuation, that would confirm this impulse. Now remember what I told you, when you have an impulse to the upside, if you don't get a pattern, right, that a continuation pattern or a reversal pattern, then that impulse is not confirmed. It might be just overriding or trying to create a deeper correction. So when you don't get a confirmation pattern on impulsive move, then it's not confirmed. So what I was looking for was a correction movement to allow me to scale in on this trade. So I don't need this. So damn it. Okay, good. So it did go in. So what I did, so when I'm trading, what I like to do is I like to trail my stop loss. So after each high, that is made. So I did, after that high low, I did try my stop loss, and I did get out right here, because I do not like the movement that was happening, consolidating too much. I just wanted to take my profits, and I was going to see my friends, so I decided to take my profits out. I didn't want to see it going all the way up again and taking the profits that I had made. It's not that I'm being impatient, but I understand how Kiwi dollar likes to behave. I understand, I know how this pair behaves. Bear in mind, I've backtested it, right? So I did take out my profits. Remember what I told you, when you have an impulsive move, right, and there's no continuation pattern to support that impulsive move, then it's not confirmed. You need it has to be confirmed. So what happened is it just created a deeper correction. Okay, same thing that we got on the previous one. 3 touches, first touch, second touch, third touch. On that third touch, more confluence was impulse and this rising wedge ascending type pattern, which is also a reversal pattern. I did not take this trade, to be honest, but I would have taken it if I had noticed this. I wasn't looking on it, which is something that I need to fix, which is something that I don't capitalize on the full movement of the trade. I tend to get to take my profits, and then I move on to looking for other setups and other pairs, which is something I need to stop doing. So I would have entered this nicely with about a 20 pip stop loss. 20 pip stop loss. And I would have targeted those lows there to be 1-to-1, which is something that it's not bad, but it's the minimum. Right? My overall targets would have been these lows here. So 1-to-2 would have been a good trade. So we did look at that. Let's look at gold, and then we'll go into the trade I took today, and we'll explain that. So let's look at gold. So this is, so what I like to do is, look, you need to start forecasting ahead. When you focus, that doesn't mean that this must happen for me in order for me to take a trade, but it puts you 10 steps ahead of everyone else. When you focus, you know what you're looking for in the markets. Don't just go in the markets with a mentality that if it breaks this level, I want to see a retest and I want to go. No, what type of retest are you looking for? What type of candlestick confirmations are you actually looking for? You need to backtest all of these things. Now, I focused ahead. I'm always prepared. So when I enter the markets, my emotions are not there anymore, because I know what I'm looking for ahead of time. And that has been very, very, very helpful. And I advise people to start doing that. Start forecasting, start looking at your pairs. Okay, if you trade EURJPY, which is one of my favorite pairs, okay, this is what's happening. I need to see this, I need to see that to happen in order for me to take a trade. Because when you just wake up in the morning, you open your PC, you look at your currency pairs, and you see this happening, right? But you're not prepared. You don't know your levels. You don't know what you're looking for. Your emotions are gonna be there when you see a red candle and your bias is short based on high time frames. You wanna go short right away, and you should stop doing that. You should start forecasting. So this was my forecast for gold. I did take a trade here, and I did lose a trade on gold, but I'm still looking at the same forecast. I did not follow my trading plan. I took a trade of something that I did not forecast, so I did not know what is going to happen there, and I did lose that, and I did take that as a lesson. Take trade that you know that you prepared for, trade that you forecasted for, right? So I did take a trade on this because I was not in any trade at that particular time, and I felt like I needed to be in a trade, and because of that, I lost, right? And I wrote that in my journal. Look, follow the fucking trading plan. If you don't focus for something, if you're not prepared for that particular trade, don't take the trade. It's useless. You're just gonna give all your money back to the broker. Don't take that trade. Be prepared. Be 10 times ahead, because these brokers, they are always prepared to take your money. So let's look at gold, and which trade I actually took and what I actually lost. I'm gonna turn this shit off again because it's just looking ugly, bro. It's looking damn ugly. So let's look at this on gold. And I hope that you're taking some you're gaining a newer perspective into how I look into the markets. And yeah, so on gold, I did my analysis, damn it. So what I'm gonna do is okay, this is basic stuff. So I deleted my analysis on gold, but I'm not gonna do my analysis right now because it's my strategy. So I'm just gonna put in the stuff that we got on the. So I had something like this, and if you really pay attention at gold right now, so if you really pay attention on gold right now, there's gonna be a short that's gonna come in based on my analysis, my perspective. There's a short opportunity that's gonna come in. So I'm just gonna put in what I had on. It's exactly the same thing. So would you have this this pattern here, and we do have this structure here. So my first touch is here, my second touch is here, my third touch is here. How is the touch behaving? Ascending structure, which shows me what? Reversal to the downside. Just like when I had I trade patterns. Some people are asking me why they see so many trend lines on my chart. It's not trend lines, these are just guidelines. I trade market structure and patterns. So what I was looking for, where I took my loss on gold is right around here. I'm gonna show you when I go down to the H1. So I took a long position there, and then I got stopped out. So I was looking at the H1 time frame. Okay, right here. The fuck was this now? Was it here? I think there's somewhere here. I did take a trade on gold. I think there's somewhere here. And a nigga go stop that. When these markets are ruthless, they don't give a fuck what you think, how you feel. They will take you out. So my reason for taking this trade was essentially I had, so you see impulse, correction, impulse. I was just looking at this as a deeper correction and I was expecting a long, and that long did come, but didn't come at the time that I was thinking, because I did not focus that I had. I'm not really gonna go in depth in gold because at least in my analysis I need to go back and really think that through and actually do my analysis on this again. So I'm gonna go on EJ, the trade that I'm currently in, and the trade that I took today. EJ is one of the trades that I took, including GBP CHF and GBP AUD. GBP CHF, I closed all my positions, profits were made. So I'm gonna go on EJ. I don't care about my win rate. That's something that I've realized. When you care about your win rate, you just like you slowing your progression as a trader, focusing on how many pips you can catch, focus on percentage, not monetary value. And that's something that I've learned through many lessons that I've learned through the market by losing money, man. So take these lessons to heart. So yesterday at night when I was looking at EJ, so what I saw here is, remember what I told you, when you have an impulsive move, right, and you don't get a correction or a continuation, then that impulsive move is not confirmed yet. You need to get a continuation or a reversal pattern to confirm that impulsive move. So it's almost guaranteed that you're gonna get your impulsive move, you're gonna get your continuation or reversal move to confirm that impulsive move, because the market moves in cycles: impulsive, corrective, impulsive, corrective, impulsive, corrective. Now let's go on the daily. What this is this biggest impulsive here, and I saw this pattern. What did I tell you on the previous videos? If you get your impulsive right, to confirm the impulse, you must get a pattern. But what's the second phase of market structure? It's impulse correction, but the correction must be counter trend to the actual direction which the market is progressing at, right? So the market here is going up, so the pattern you must get must be counter trend, right, which is the second phase. So this was perfect. So it's counter trend telling me that it's about to go up. I might be saying this a little bit too fast and it might be confusing you, but I've been backtesting this for quite some time and I actually understand this. It's almost part of my intuition now to look at these patterns and understand them. Okay, I've seen this pattern somewhere, I've seen this pattern somewhere, you know. So I saw this big impulsive move. Normally after a big impulsive move, you're gonna get a deeper correction, right? Which is why I did not want to take this trade, but I took it anyway. So let's go back to the 4 hour. Now on the 4 hour, I'm gonna put in the replay button. So yesterday at night I had something like this. This is at night. I had something like that, right? So what I've learned, right, is when you get steeper corrections like these ones, normally they do go up, right? They do go up, but the thing is they don't actually go to the targets. There's a percentage probability of where it has to go. I'm not gonna get in depth on that, but there's a certain target within this structure here with a percentage probability, which is to get a certain percentage, right, that is to come to this structure. And when it does come to this structure, which is my overall target, when it does come to this structure, what we form is a double top here and here, which will give us a chance to short it again and continue to the upside, maybe because of high time frame momentum. So what I saw here is this big impulse that came in, and then we got this correction, but this correction is steep, right? Probably if you trade support and resistance, what you're seeing right now is what this is previous level of support. I don't know what you're seeing, bro. I don't know what you're seeing. So in this pattern here, I know that it will take me to the it's a reversal pattern to continue the upside, because it's the second phase of the market, which is the corrective phase. So that's why is this pattern here, right? And when I went to the 1 hour time frame, I did see that we had our first touch here, our second touch here, and our third touch here. And the market tends to do this a lot. And what I did do is I took this trend line in. Remember, trend lines are just a guideline. Don't make them subjective. When you make them subjective, you get it. You always have a fixed mindset, and you keep doing the same things. And when you keep on doing the same things, expecting a different result, you know what you are. I'm not gonna say it, but you know what you are. So trend lines are just a guideline. What I like to do is focus on the most recent 2 touches. If the structure is not clear, let me just give you an example of impulse and correction, so you can see the power of this. So you got your impulse here, right? You got your correction, got your impulse, got your correction, you got your impulse here, you got your correction, you got your impulse here, right? You got your impulse here, you got your deeper correction. Just an example of this. So what I did notice here on the third touch was we're making this structure here, right? This structure here. I always like focusing on the two most recent touches, right? So I saw that we had made if I do wear in this trend line, we can count it as 1, 2. This is our third touch, but I just liked putting my trend line here. And after this retracement candle here, it's 12 o'clock. That's when I entered 1% risk. I got 35 pips. And right after that, what happened? So when he did this, I did when it wait a minute now. What's my entry again? Just the open. I think there's a little bit higher somewhere here. Right? Yeah. So I did 5 pips. There was a possibility that the market would come back down to the downside to retest this to create a double bottom. And I was keeping that in mind, and I was risking 1% only, and I was managing this position very, very conservative. I did cut out partial of my positions because I understand there's a certain probability that the market is to come to this level here, and it's a very, very high probability. So I did not want to be in here. Yeah, guys, basically that's it. I'm losing my voice. I'm gonna well that's it. It's everything. Yeah, I'm losing my voice, so I'm gonna stop here. I hope that you did learn something, and that some tip that I can leave for you is because I've been trading for like, I might be so young, I might be 16, but trust me, I know a lot. I've been trading for like a year and a half, and I know a lot. I've been through everything, indicators and all of that nonsense. So I've experienced quite a bit. If you just starting trading now, the most important thing is like to focus on the amount of pips you can actually catch in the market, and to focus on not your strategy, but focus on percentage. Focus on things in terms of percentage. Don't focus on the monetary value of how much money you can actually make. Focus on the percentage, and that's something that I'm still trying to get. And you need to start journaling all your trades so you can hold yourself accountable. Did you follow your fucking trading plan or not? How was this week compared to last week? So you can see, you can track your progress and your progression as a trader. And I just want to say thank you if you are watching this, and I wish you guys the best of luck. Just comment below, subscribe if you want me to post more videos like these. Comment below, subscribe, like, and I wish you the best. I wish you the best.